Welcome to the second part of the S&P strategy recap for the 13th through the 14th. So coming into the next session, we see the market here. We had that sell our fade initiate, and now we're coming down to the directional. Take a look at the market state for the 13th. And the market is still in a neutral digestive state. Structurally, however, the R level is shifted down. So we had the R level shift down to the upside pivot. And so we've got negative sentiment below here, and we've got our directional at 21.44 1/4. And so we're getting a failure here. Here's our upside pivot. So the failure from the directional, we're anticipating it to transition back down to the downside pivot area here. The market's really had some nice linear moves. We've been this whole down move, holding these averages after a breakout. Then we have a reversal signal, really just holding structure all the way up to the R level. Now we have a R level fade that kicks in, and now we're getting that negative transition, a failure below the directional. And now we're coming up on top of the downside pivot. And as we come into this current session, we have a failure, a DP breakout. The market is neutral digestion, so we've been kind of stop and go, but we are kind of working these metrics lower. Let's put the minor levels on here. So here again we have the market is broken out to the downside and is stabilizing off the CRX minus. So we can take a look inside the order book, and we can see we've got some good liquidity building up in the lower variance here below the CRX minus. We know this is a good extreme for a breakout. We've had this good emotion here. You can also see the order book's kind of lit up at these levels. So there may be the potential for another bounce back up into this area to sell against these, the alert distance below the downside pivot. The market is really just working the negative sentiment off the R level, but we're trading below the DP. Typically in a neutral digestive state, it can be more choppy. So not pressing a breakout in this situation. How can we get some more clarity? One of the indicators I like to look at, the ADX tells us the market's got good trending ability. So in this case, taking all the information we have into account, we are in neutral digestion. We have had some decent trend moves, and we've got a purple ADX which is telling us that yes, we can trend. So we're going to respect the trend. So just to leave you with the with the expectations, if we're climbing the staircase down, this is the first structure break, second structure break. So this is the top, and you can see kind of our averages are kind of coming in there as well. So if we did get a positive bounce off the CRX minus, this is really your risk where you're wrong. Doesn't need to go up there. Absolutely, it can maintain a trade below the downside pivot, and if it does, that's more negative. And we can see we have some liquidity in the book here. We'll see how that holds up if we get a push into that area. So if we are selling the market in this area, we can risk above our metrics here. So risk above the variance or risk above the alert distance. More likely than not, this thing's going to trend. It's going to top out here below these levels, and it's going to continue to cascade. If we do get a push back up into the CR minus, it's more of a signal that we might be, there might be some digestive action, more stop and go before the market really makes a decision. Is it going to roll over again, or are we done and we're going to move back into a neutral posture? So here are the results of the session. The market does roll over, and it does bounce back into a neutral digestion. So we had a little bit of both. But I want to point out a couple interesting tells. Here we're having a market that's transitioning through the directional. We're working our averages. We're working negative price structure. We have a failure coming down to the CRX minus. We pull back in. We hold the variance metric. We make a new move low. and we come back into that same zone and we're making a lower high. So this is classic trend. We've got the ADX going in our favor. This thing is breaking out below the downside pivot. We're in a downside breakout. We're in the hedge strategy theme, and the market is starting to move lower. And then here we get a confirmation. We're breaking below the CRX minus, and things are really aggressive, and we attain our 1 APMD. It's always good to look back. What did we accomplish during the trade session? Well, we accomplished a 2-segment move. So we have, here's one segment. Let me just clean this up. This is one segment, 2 segments, so 2 APMDs. The market, 2 APMD move is a basically an objective day. And a lot of times that's all we get, and that's what we got. So anytime the market's attaining a 2 APMD objective, especially in a neutral market state, it's something to take note of. And here we have that lower low, high, lower low, and then we make a higher high here. Does a little damage. Market comes down, takes out the downside pivot. Let me put our metrics back on here, because this is important, that the market actually took out this lower alert distance. So it should really accelerate and keep this pretty picture, and this rally here should really should top out below the DT1 and continue lower, and absolutely it should top out below here. We can look at that price structure and say, oh, maybe they'll squeeze it up to here. Or even that would be the absolute high point of market structure. Let me put the minor levels back up here. But when they do this, this is a tell that this is over. We know the market's in a neutral digestive state, so we have that in kind of the characteristics of that state are more digestive. Those are some of the attributes, and so those can always come back and kick in, especially after breaking structure, and this is the tell that they're going to do that. And so when the market does something like this and it's breaking back down to new move lows, you don't want to get sucked into anticipating this to return. If this was going to go, it would just go. It wouldn't do this. When markets when they want to give it up, they just give it up. They don't let people get back in. And typically they do not do that, and so it's more likely it's going to stabilize, and you're going to be stuck with kind of a difficult trade, and that's what we got into the close of the session. So it's an event week. I'm going to roll right into the action on the 14th, and we can see we had the market really come off, and we had this big violent trading, and now in early trading coming into the European session, we have this market digesting, and it's stabilizing off the CR minus. And taking a look at the market state, we've got the S&P is again still in a neutral digestive state. Attributes are more digestive. We look at where's the sentiment bias. It's above the market again at the upside pivot, so it's giving us negative sentiment below here, so we're more of a sell rally bias. Another thing that's come into play again is we've got that yellow dynamic channel, so that the market yesterday was kind of pushed to an extreme. Our state conditions, our strategies are going to be the same, and we've got more of a negative bias, fading momentum into the upside pivot area. If the market presses the downside early, we might get a BDP reversal, and that could set up a sell opportunity against the directional for a trend, continue to kind of negative transition, or a break-in structure is going to give us a buy signal. So taking a look at the action, we didn't have that situation we had the other day where the DC channel was yellow and we were down at the downside pivot. We're more in the middle, and that another way if a market's at an extreme, it can go sideways. So it's either going to give us a move in the direction. This momentum is going to continue and open up pressing. That's when you get the reversals, and if it doesn't do that, it typically foreshadows a sideways session. And as we're coming into the regular session, that's what we've had. And so it's a dangerous trade. We've got a market that's pushed to the extreme, and we could have some volatile swings. And where can those volatile swings happen? Well, they can happen within the CR minus and the CR plus. So we could see some big digestive swings here. But what do we also know as a fact? Fact is we're sellers of rallies. So this market has a negative bias. In addition, we still have a purple ADX. And we know that a purple ADX means the market has trending ability. So those are important facts. We know we have the dynamic channel that's yellow, and we have a purple ADX. So we know this is not giving us a reversal, it's giving us a digestive trade. But we know this thing has the potential to trend. And we know we had a big negative event that we're following. And really this is just telling us we need to wait before that can resume. And because it wants to trend, and we want to potentially transition through this neutral zone, but we got a little ahead of ourselves. And so as time goes on, we really have had this digestion since yesterday. And now we're since the 13th, and we've been continuing to digest. So as we move farther and farther along this digestive path, all of a sudden the energy is going to start to build up for potentially this negative sentiment. We have sentiment bias above here, and if we're below the directional, that's kind of telling us we're pressing it, because the directional is our classic pivot point. We're below the directional, we're leaning negative. Where are we leaning negative towards? We want to make a play for the downside pivot. And so that's what happens today, is where we have the market does follow through, and here it pays out a full APMD down to the downside pivot. And we get a little reaction off the DP back up for a half APMD move back up to the CR minus, and basically settling on support. But what's happened is the market is really it's digested enough, and now it's back on edge. And is it going to follow through, or are we going to reverse out of this area and bounce back into the neutral zone? And so that's what's on T for the 15th. So I'm going to update my grid. So the market's still in neutral. One thing that's a little different is structurally, we've got the sentiment bias above the market now, coming in at 2148. So it's kind of really shifted up. So basically telling us that this market can squeeze us all the way up to the R level, and it's still negative. So that's something to be aware of. And the downside pivot now is at 2104 and a quarter, and we still have that same dynamic channel yellow, but we still have the trending ability. So it's kind of conflicting signals here. One saying we can trend, one says we're at the extreme. Markets can always get extended more. That's one thing to be careful of. You don't want to hang on one indicator and be all end all. You always want to practice good risk management, but it's always a matter of being aware of what's happening with price action within this structure in the context of those conditions and characteristics. And when we view it that way, we can pick up on the tells of the market of what it wants to do. And currently, in the early session, we're weak. We're below the directional. Are we going to be able to start to trend and to move lower? We know we're a little extended, so maybe if it does push lower, we're going to have more stop and go action. Absolutely, markets can go to extremes, and so you don't want to take a stand. The thing could actually absolutely give it up. But if we do get a buy reversal, that's going to be a positive signal, and then we have to think again, what if? If we do get a positive signal off this area, what could we do? Absolutely, we could make a play for the R level. It'd be a big move. And what's going to be the big area? This 2118. The directional is really a key number right now, because if we look at the directional, it's really gauging sentiment. It really kind of shifted the sentiment down, because if we're below the directional, we're negative, and we're pressing support. We shift above there, it's kind of negating this weakness and saying, okay, we are back in neutral. We could have a rally. If we do have a rally and this thing starts to climb the ladder higher, it can climb back up to the upside pivot, or even climb even higher up to the R level. So it's a bit of a stretch. We're going to continue to follow the S&P. So any questions, please contact me at info@jsservices.com. Thanks.